Stock market traded with a mixed tone on the Wednesday as the investors weighed interest rate expectations, upcoming economic data, and corporate earnings. The United States equity slipped across the major benchmarks, while the Canada posted modest losses, and the Latin America also markets diverged, with Brazil showing resilience even as Mexico and Chile retreated. Also on the Wall Street front, the downturn was broad-based but relatively mild. Also, the Dow Jones Industrial Average fell 171 points and to the 160 points. The S&P 500, also widely regarded as the best barometer of the United States market, lost 18 points, finishing at 6,600. The tech-heavy names also saw selling pressure as the Nasdaq Composite declined 75.6 points or 0.3 to 22,000. The small-cap stocks were hit harder, with the Russell 2000 sliding 0.9% to 2,400. Interestingly, despite the declines, the investor nerves appeared steady on the CBOE volatility index, or the VIX index, that slipped 2%, suggesting that traders view the pullback as profit-taking rather than a deeper sell-off. In Canada, the equities mirrored the US trend, but with the softer losses. The S&P TSX Composite Index also dropped 58 points, also to reaching the 29,000 level, while the S&P TSX 60 edged down to 1,700. Also, the energy and the financial stocks dragged on the performances as the investor tracked the oil prices movement and the global demand outlooks. Also elsewhere in the Americas, the market presented a mixed picture. The Brazil's Bovespa index managed to buck the trend, inching higher by the 66.81 points, also to reaching the 146,000 point. The gains in the commodity-linked sector also helped offset the global risk of sentiment. In contrast, the Chile's S&P IPSA fell 32 points or 0.35% to reach 9,000, while the Mexico's S&P BMV IPC suffered one of the sharper declines in the region, sinking 462 points. The divergence underscored how the country-specific factors, from the industrial performance to the consumer demand, continued to shape the market direction. Overall, the trading across the region was marked by caution. The investors are awaiting the key United States economic reports on the inflation and the jobs, which could heavily influence the Federal Reserve monetary policy path. With the indices still near the record highs, even the slight surprises in the economic data could swing the market sentiment quickly. The analyst noted that the recent pullbacks are likely part of a natural pause following strong gains in the recent weeks rather than a shift towards the prolonged weakness. Looking ahead, the global markets will also continue to react to the central bank signals, corporate earnings, and the macroeconomic data. For now, the volatility remains muted, also suggesting the investors are not interested or rushing to unwind the positions, but are interested and are instead adjusting the portfolios carefully in anticipation of the next market moving catalyst. The commodity market traded mixed on the Wednesday, with the energy prices mostly lower, the metals showing slight weakness, and agricultural products edging higher. The traders' balance shifting, supply-demand dynamics geopolitically considerating, and the currency movement, while also keeping an eye on the broader economic outlook that also continues to influence the raw material demand. In the energy market, the crude oil prices slipped as investors reassessed the global demand prospects. The WTI crude oil future fell $0.29 or 0.55% to settle at $64 per barrel, trading within the 52-week range of the $55. Also, the Brent crude oil, the international benchmark, also eased, declining 0.24% to 0.35% to 68 per barrel compared to the yearly range of $58. Also, the analyst attributed the pullback to concerns that of the slowing demand growth, particularly in the major consuming economies. Ordered supply discipline from the OPEC Plus members provided some support. The natural gas bucked the trend, rising to 0.57% to $3 per million BTU, while the prices moving between the $2.21 and $4.93. Also, the strong seasonal demand and the tightening of the inventories gave contracts a modest boost. The precious metal traded with little conviction as the investor awaited further signal from the central bank. The gold futures were virtually flat, dipping just $0.20 to $3,000 an ounce, holding nearly the upper end of their 52-week range between $2,000 and $3,000. Silver slipped slightly down 0.05% to reach $44 an ounce after recently testing highs nearly $44. The market participants said the metal complex is consolidating after sharp gains, with the safe haven demand steady but tempered by the strength in the United States dollar. The agricultural commodities were also mixed but generally